Hey, what's up guys? This is Taylor. It is the 18th of December, and we'll jump into the weekly watch list that will apply for the week of the 19th. Creeping up on Christmas here. So, last week was not the, it was not the best showing from the Bulls. So we got some problems here, guys. It looks like the Bulls might have fumbled the ball once again. So we've got our weekly chart, we've got the daily chart, and we got the hourly chart over here on the far right. So as far as the problems, we'll focus here first on the weekly chart. The current pattern in the market, or the current trend, is a downtrend here on the weekly chart. And you define a downtrend as a series of lower highs and lower lows. They put in a low, they rally it. We never get back above that previous swing high. So once again, we have a lower high. Then she pukes it up. We go on to make a lower low. And what I was looking for here over the last few weeks, was really whether or not this rally turned into a reversal. Could momentum on the MACD shift positive? Could we get back above the weekly 50, which obviously has been a pretty big level of resistance this year? And most importantly, could we actually trade back above that previous swing high? If the Bulls could have done that, maybe they still do. Looks a little bit unlikely. But if the Bulls could have done that, I think that would have been confirmation this is a reversal. Meaning we're no longer going to play out this pattern of lower highs and lower lows. And a quick look here at the Dow Jones. Now keep in mind, you need the S&Ps and the QQQ to play ball for the market to collectively actually put in a bottom. But the big Dowski here was actually trying to show signs of a reversal. And maybe it still is, right? To be determined. But this is what we never got from the S&Ps or the QQQ. MACD goes positive. You actually trade above the previous swing high, and you're actually rebuilding some structure. So the Dow looks okay. On the daily chart here, MACD crosses negative, and on your hourly chart, structure's pretty much blown up. Under the 21, under the 50, under the 200. So things were looking good for the Dow. But more importantly, they never really got to that point for the S&Ps or the QQQ. So we shall see what's up this week. But as far as this pattern here, guys, lower high, lower low, lower high, lower low, rallies back to the 50, gets stuffed. This could be your lower high, which means from here potentially this daily squeeze could fire short, and potentially that takes us down towards 3,500, where once again we will put in a brand new low. So I think there's a little bit of that potential here in the market. Now moving on to our daily chart in the middle, as you guys can see, we rallied towards that 200. We got stuffed once, we got stuffed twice, and Thursday and Friday, pretty ugly action there. We're under the 21, we are under the 50. And what I think is probably going to send this daily squeeze, firing short, would be if the MACD crossed negative here on the daily chart. And then if you look over here to the hourly, very much like the Dow, structure is broken. You're under your major moving averages, and the MACD is bearish. So from top to bottom, we're in a weekly downtrend. We've rallied back towards the falling 50, which of course has been big resistance. We got rejected at the daily 200. Also big resistance. Now we have a daily squeeze here with a negative histogram. So a daily squeeze with a negative histogram under major resistance in a weekly downtrend, with your structure of course blown on the lower time frames. In plain English, guys, not good for the Bulls. And unless they can, I think pretty much if they can't trigger a short squeeze next week, if we can't get the S&Ps back to 4,000, I think we eventually see this daily squeeze fire short. So until proven otherwise, I'm looking to short the bounces, with 4,000 being my big over-under level. And better yet, maybe you call 40-30 your major over-under level. But I do think for now, guys, looking to short the bounces. One chart I would like to short, in this chart alone, big problem for the market, is Big Apple. The big apple. So on your weekly chart, one observation here, the S&Ps, the Dow, the QQQ, they at least tried to clean up the weekly structure. They're hanging out for a few weeks above the 21. The Dow, of course, gets that positive MACD cross. So things were looking, we'll call it potentially promising. You never got that out of Apple. This weekly squeeze still looks like death. So let's see, top to bottom. All right, none of it pretty, but it could all make for a good short. Weekly chart. MACD's been bearish since March. The weekly squeeze officially fires short next week. So keep in mind, rule of thumb with a squeeze. Squeeze fires short, you could get a good 8 to 10 bars of momentum. So we're pretty early as far as the energy that could get released to the downside. So bearish weekly squeeze firing short. You have key support here down at 130. Under 130, guys, I'm not too sure what's going to step up to save the old apple here. So that weekly squeeze looks poised to fire short. Moving on to the daily chart. It's not any prettier either. Daily squeeze also fires short. MACD just crossed negative. So the reason I think Apple looks like a good short here, one, is because the market looks like it could roll over, but two, everything's still pretty early. All that built up energy in the weekly squeeze, all that built up energy over here in the daily squeeze hasn't triggered just yet. It's a little bit different if we're trying to short Apple, 3 ATR away from the weekly 21. I think ideally we get some sort of bounce next week. Then you put on the short position, try to put yourself in a position to catch that weekly squeeze firing short. So weekly squeeze fires short, daily squeeze fires short, and we've pretty much got sell signals here across every time frame. So the goal this week would be, in a perfect world, we get some sort of bounce. But then I'm looking to put on the short in Apple here, probably. Let's check out the options chain. I even think something like February 17th expiration. Yeah, February monthly expiration. I think you go a couple of strikes out the money. So maybe some 125, maybe some 120 calls. But the goal is get a decent bounce this week. Buy some February expiration, slightly out the money calls. And then hang on tight, looking for that weekly squeeze to eventually take out 130-ish. And then I think you could get a pretty good slippage from there. So that's a game plan, guys. A huge part of being a trader is you have to be flexible. So last few weeks here, I've been kind of looking at the market, from the perspective of this could trade higher. Last week's action, not too promising. And with a few of the problems we pointed out here today, I think the bears have taken control once again. So we'll find out in the next month or so, most likely, if this pattern of lower highs and lower lows continues. And if that is the case, I do think names like Apple, with all that bearish energy built up in these bigger squeezes, could make for some pretty good opportunities. So as always, guys, I will keep you posted. Hope you found this helpful, and I will see you tomorrow morning at 8:45 a.m. Eastern for some pre-market prep. Until then, enjoy your Sunday, and I'll talk to you soon. What's up, traders? This is Taylor from Focus Trades here with simplertrading.com, and as always, I appreciate you watching our videos. If you happen to enjoy this one, go on ahead and like and comment down below, and if you're not already, make sure you go on ahead and subscribe and click that bell icon. That way, whenever Chandler and I upload a video, you'll get a notification once it's live. And if you want to watch us trade live with our own money Monday through Friday, you can check us out at simplertrading.com. See you in the next video.